And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. And as always, if you end up liking this content, please hit the like button below. And if you've not yet done so, please subscribe to our YouTube channel. So what I want to speak to you about is maybe the hottest, most popular investment out there currently. And guess what? It's not crypto. It's got nothing to do with crypto. It's like the other end of crypto, right? We all know that inflation is surging, right? It's the lead topic on all the news, how much gas costs, how much food costs, everything is surging. Believe it or not, there's a certain type of treasury bond. It's called an inflation-proof I-bond. I for inflation, has become probably the hottest investment out there for people. I get calls about it all the time. Now, I want to preface this by saying, you need, and we're going to go through how you buy them in a minute, okay? But before I say that, you need to know that you can't buy I-bonds through your financial advisor, through your brokerage account, okay? So that's a big if. So don't call me. You people are calling me all the time anyway. We want to buy I-bonds. How do we buy I-bonds? Not through me or people like me. But right now, I-bonds, okay, are paying 9.62%. Okay, that's pretty good. And that's right now guaranteed for the next 6 months by the United States government. So that's pretty good investment, okay? Always, you're right, here's a disclosure, right? Make sure that that you understand the risks associated with any investment. There are risks. We'll go through some of them. Make sure that it fits your financial plan, and learn about the investment before you make any investment, okay? But right now, I-bonds are paying 9.62%. They are so popular that in the last 6 months, okay, that ended in May 22, $17.5 billion went into I-bonds. Guess how much money went into I-bonds in 2020, okay, a year and a half ago? $364 million, okay? So, whoa, hello, they are really popular. And I'm telling you, I get calls all the time. So I figured I would just do a quick report about them, okay? Now, how do you do it? How do you buy an I-bond? Well, it's not so simple, but it's definitely doable. You have to go, the only place you can get them is from the Treasury's website, US Treasury's website. So you have to go to treasurydirect.gov. You go there, okay? And then you have to open an account, and they say it takes about 10 minutes to do, but from what I've heard from people, it's a longer process than that, but you can do it, right? Like I say, until October 2022, it's going to be paying 9.62%. Now, each individual can only buy $10,000 in electric I-bonds every year. Okay, keep that in mind. Now, there are ways to increase that amount of money, right? If you're a high net worth investor, is it worth going through all the trouble to put $10,000 away? On the other hand, to get 9.6%, is not bad, right? Compared to a CD or whatever, even with rates now starting to inch up, we're nowhere close to that on a 1-year CD where you're looking at maybe, 2% or a 1-year treasury bond, 2.25%, whatever it is, you're nowhere close to 9.6%. So let's say you're married, both spouses can put in $10,000. If you own a business, you can put in money. If you've got a trust, there's another $10,000. So there are ways to increase that $10,000 limit, but again, each person, you're limited to $10,000. You can't cash in the I-bond for a year. And if you these are 30-year products, but you have to hold it for at least a year. And if you cash in within 5 years, you lose the previous 3 months interest. Okay, so let's talk about that. If it's a year, right, you want to hold it for at least a year, and then you want to get rid of it. So you'd be losing, again, 3 months of interest. Still makes it, for short term at least, versus, what you're going to get in a government bond, a CD, whatever, even for short term, it seems like a pretty good idea. but your money is locked up for at least a year. And as I said, if you sell anytime within that year to 5 years, you are going to be forfeiting 3 months of interest. You've got to pay federal income taxes on the interest. That's something else that you need to know. These are things which I think are definitely important to know, okay? There are some, I don't want to say they're necessarily risks involved with them, but the maximum that you can buy for certain people, is a drop in the bucket. It's not going to be worth it, number one. Number two, there's a process to be able to open up one of these accounts. You have to spend a little bit of time opening that account. You only can open it up through the Treasury again. And I think you also can have up to $5,000 from a tax refund go into I-bonds as well. So that's important. But again, if you're going to want to cash out, liquidate within 5 years, you're going to be forfeiting 3 months of interest. The way that it's calculated is that it's a floating rate. There's a fixed rate element and then a floating rate element. So the reason, because inflation is now surging on the floating rate element, the variable rate element, that's what gets you up to 9.6%. But if inflation were to start dropping, for example, that would definitely impact to the downside your return, and it's reset keep in mind that the interest you're getting is reset every 6 months. If you're a long-term investor, okay, stock markets may be, rocky to say the least right now, but keep in mind, again, like I said, you're not locking in 9.6% for the next 30 years. You're locking it in for the next 6 months. There's a good chance that inflation over after that, when it gets reset, will still be a nice number. But if the Fed succeeds, or if the market, right, just the market succeeds in bringing down inflation, or inflation starts coming down anyway, so you're going to start making every 6 months after, you're going to start making less money. And if you're a long-term investor, you still might want to look at how the stock market will perform for you, and whether that's a better investment choice for you. Keep that in mind, okay? If you need super quick liquidity, it's not for you. Like I said, you've got to be in for a year. And after that, again, between 1 and 5 years, you forfeit. If you liquidate, you forfeit 3 months of interest. So if you're looking to park money for 5 months or 6 months or whatever, this is not for you. Take a look at the Treasury Direct website. That's probably the best place to go. Go online. There's a lot of articles also about I-bonds, how they work. They're certainly hot. I'm not going to dispute it. And for certain people, yeah, it's a great place to put money for, intermediate term. I don't know that I'd want to put it in for 30 years, but again, that depends on your own specific situation. And you've got to do the research, right? You've got to put in the time and do the research to see if this is the type of investment that works for you. It's certainly one of a whole, cadre of investments that one could look at on the fixed income side. Again, it's got its advantages, which currently are a very, very high interest rate. But like every investment, there are risks, and you have to search out the risks. I mentioned some of the risks, but it's very, very important for you to do the research, because this is all on you. Okay, there's no financial advisors involved here. There's no brokerage accounts, right? This is between you and the Treasury. Like I said, it's the only way to buy I-bonds. Okay, so do the research, do the work, go online, right? See look at the risks that I didn't even speak about, look at the advantages, and then go ahead and make your decision. Okay, but it's definitely a very, very popular investment, and good chance it's probably, again, without predicting the future, safer than crypto. You've been tuning in to the Aaron Katzman Show. We speak about your life, your money, and your investments. If you liked this show or any other show, please hit the like button below. And if you have not yet done so, or if you have done so, but if you've not yet told your spouse or your friend or your significant other, please hit the subscribe button below. I appreciate it very much. Thanks so much for tuning in, and we will speak to you soon.